It's time for Wise Money with Korhorn Financial Group with financial advisors Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of Wise Money with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being with us. My name is Mike Bernard. I am your host. I'm also one of the certified financial planners on the show. With me in the KFG studios, my business partners and friends, Kevin Korhorn and Josh Gregory.
That's right. Well, if you've ever had a side hustle or you've thought about maybe starting one, do you know how it will affect your taxes? Today, we're here to help you form a tax plan if you're a freelancer, a sole proprietor, a self-employed moneymaker. That's on this episode of Wise Money.
Oh, can you feel it? It's tax season. It just feels terrible. I'm just kidding. No, it is tax season. We're talking about, gosh, what applies to so many of you. If you have a question for the show, we've had questions about this very topic. So reach out to us. You can do so in a couple ways. WiseMoneyShow.com is how you find us online. Submit a question right there on the right. All over social media, wherever you're at, we're there too. And then you can call or text 574-222-2000. That's 574-222-2000. Okay, so Kevin originally brought the idea for today's show, and I was, like usual, I was just a little apprehensive, a little nervous. Now, Kevin's ideas, most of the time they work out. I'm just teasing you.
Fantastic ideas.
So back in December, the Wall Street Journal ran an article about taxes for people with some side income, and I thought, we can't really devote the headline topic to this. It really doesn't apply to so many people, and then I started researching it. Currently, the research says over 30% of Americans have side income, a.k.a. the side hustle. So, and I think it actually might be even higher if we think about the folks that have transitioned to being self-employed and made it their main hustle. So think about it. You Air BNB your house, either for a Notre Dame game or for a weekend. This applies to you. You drive for Uber or my favorite, Uber Eats. Listen up. You start a side venture with some friends from college like I did. You do eBay or Etsy or anything like that, this impacts you. And then one other. Have you ever thought about when you retire, staying on part-time to do contract work? This applies to you.
Absolutely.
So full and fair disclosure, the idea was inspired by a story from Laura Saunders. She wrote it back in December in the Wall Street Journal. She wrote about the 9 essential tax tips, and I think some of that was fluff, and she's not a CFP either. So basically, we condensed it down to our top 5 tips. If you're a freelancer, or you've got a side hustle, you have side income. So the first tip for people that have this side income, and you're not going to like this, but it is it's the starting off point. You've got to track your income and track your expenses on an ongoing basis throughout the year. Why is that important?
Well, many people not only need to know, are you making money at the work that you're doing on the side, but if you are making money, you're going to end up paying taxes at the end of the year. And boy, if you've ever seen folks, I'm sure we all have stories, folks who get behind on their taxes, it's often the side hustle that keeps them from staying on top of their tax picture. And it's because they don't have great records. And they have every intention, sometime in January or maybe it spills to February, to go back and get organized, to start tracking the data, to figure out, well, what in the world happened in this side business last year? And they can't get to it because life's busy, right? So staying organized throughout the year, in my opinion, is it's not just a tip. I mean, that's a necessity.
If just staying organized, if you've sort of brushed that one off your whole life, like some people, let me give you a planful reason. I was meeting with some friends back in December, and he was signing up for his 401k, and he says, all right, here's what I'm going to do. I'm maxing out the 401k again at my main hustle, and I'm switching over to Roth because I've just heard so many good things about the Roth. So I'm maximizing the 401k and the Roth. And I said, well, what about the rental incomes? Oh, yeah, but I think we're going to sell a couple of those. Oh, will that have some profit to it? Well, yeah, one of them will have a loss, but the other one will have a profit. Well, do you know how much? No, I really don't. And then the ongoing income from the rentals, do you know how much that will be? No, I don't really have a sense for that either. Well, if you don't have a sense for those, you really can't make that decision about should you go PreTax or Roth with your 401k. You really can't. And I mean, they're both great options, but you want to pick they're both good options. You want to pick the great one. You want to pick the one that's best for your situation. And if you don't know how that side income is going to impact your taxes, you don't really know whether you should be doing pre-tax or Roth.
Yeah, if I was going to start with figuring out what do I do if I have a side hustle, I would start at the very beginning and try and understand the different types of income and how the different types of income are taxed, because they're basically three types of income. There's active income, which you say, well, there were services performed and I was paid. There's passive income, and there's portfolio income. And so when we look at that, the other thing that people pay taxes on as well, kind of a big one, is capital gains. So there's all different types of character of income. And the question a lot of times is, well, if I make something, do I have to pay taxes on it? And one of my favorite examples was I was meeting with a gentleman a number of years ago, and he did snow plowing. And he said, well, I snow plow, and the guy that I do the snow plowing for gives me gold coins, so I don't have to pay taxes on that income. So if I was doing an Ask the Expert, Josh, what would you think about that?
Yeah, just because it doesn't show up on a bank statement or anything doesn't mean it's not income that the IRS wants you counting on that tax return, right?
And even if you're aware of the rule that you technically don't need to get a 1099 tax form unless you've received over $600 from one person, it's all reportable. Like even if you earned $500 from someone doing some side work, you still are required to report all of that, unfortunately.
Right.
Yes.
Right. So this is the thing. So if I have a side hustle, whether it's Uber or I'm renting my house out or you name it, I've got to claim that income and pay taxes on it. So when you think about an Uber driver, they have to pay federal, state, and self-employment tax.
Which is actually right into the next tip. Thanks, Kevin. If you have any side income, you need to be aware of how it's taxed. And so the second tip is you've got to be mindful of this nasty thing called self-employment tax. So what is that? And I guess let's back into what Kevin was talking about the types of income. Where does self-employment tax apply?
Well, self-employment tax applies to any income that you have that you didn't receive as an employee. Because as an employee, the way that it works, and you can look at your pay stub to understand this, but basically you pay 6.2% for what we would call FICA or Social Security, but it's OASDI, Old Age Survivors Disability Income. 6.2% you pay, your employer pays the other half of that. And then 1.45% to Medicare, and then your employer pays the other half of that. So if you add the 6.2 and 1.45, we have 7.65 that as an employee, I pay that. I can look at my pay stub, I see it right there. My employer pays that on my behalf as well. So in essence, whether you realize that or not, there's 15.3% being paid on your behalf.
That's right. So self-employment tax is when you are serving as not only the employee but also the employer. You have a little side business. Maybe you're filing what we call a Schedule C on your tax return, where you total up all of the revenues that side business generated. You subtract out all the different types of expenses, which is, again, one of those reasons why you have to stay organized throughout the year. You don't want to miss any of these expenses, because what you're trying to do is chip away at or reduce down, on paper at least, on the tax return, how much of that profit there is that you have to pay not only federal taxes and not only state and local taxes, but this other tax, self-employment tax, which, as Kevin said, is 15.3%.
So this is the tough thing. So if you start the side hustle, if you flip over and do some consulting after you retire or something like that, a lot of times you say, well, is it even worth it? Well, if you're in the 22% tax bracket federal and say 5% state, and then you've got self-employment of 15.3%, I'm not going to do the math, but yeah, it's quite taxing. And so figuring out how to manage that is a crucial planning consideration, okay? We're going to talk about a few other ways to manage that, one of those being potential retirement plan. So a lot more to come here on the Wise Money Show with Korhorn Financial Group. All right, YouTube, thanks for being with us. This is the Wise Money Show. You're at the Wise Money Show channel. We are at our first break. This is an hour-long radio show that airs locally in the South Bend, Michiana area. And you're on our channel. So we post this episode every single week. And then, sporadically, we've got other vlogs that we post as well, Next Wise Step and so on. So if you're not already a subscriber, I'd encourage you to do so and click that bell so that you're notified every time a new episode drops. And then also leave comments below. Any questions you have, we will get back to you. We'll answer it there. And if you like the content, smash that thumbs up button. Appreciate it. All right.
So I think at the end we summarize you have this, dedicated bank account, credit card, all this stuff.
Mm-hmm. Yeah, someone just decided to move to the next tip without hitting those.
I can't believe it.
I told you when you said, hey, we got to talk about the character of income. I'm like, yeah, that's the second tip. And then you just go ahead and talk about it in the first tip.
Hey, part of my job is to keep the host on his toes.
Yeah.
There you go.
Good job.
Yeah, thank you.
In preparation for the show, I was thinking through all the different clients that we have who do some sort of side business. And I was actually kind of shocked when I paused, like just how many people do.
You think it's that 30% number, that national average? I mean, the subset of the population that we work with or that hire a CFP, do you think it's 30% or 40%?
I think it could be. 20.
I could tell you a subset of the population where it's close to 80. Any guesses? Lindsay?
College town, which we're in?
I don't know.
Think of
Millennials?
Nope. Give me a break. Think of...
No
That's
offense.
A very millennial thing, right?
No.
They invented the phrase side hustle. Right?
Yeah, right.
Go south to Bremen and west to Shipshewana.
The Amish.
The Amish. Like, we were doing a retirement plan enrollment, and I don't think there was a guy that we talked to that didn't... We went there to do the enrollment, and we spoke to them over their lunch hour, which was at 9 o'clock.
In the morning?
In the morning, yep. And they all worked till 1, because I think they start at 1. Don't even get me started. Mm-hmm. But anyway, they at 1 when they get off, they all go do something else.
Totally. Yeah, that is a hard-working group of people right there.
It very, very, very industrious.
Mm-hmm.
So, but they all have questions about, can I get I need an EIN? Should I have an LLC? All of these questions about how to do it. And then I can promise you on the taxes, I was looking up, what should I deduct? And it's crazy when you think just about Uber. Your cell phone, water and gum that you buy for people, clothes while you're driving, vehicle maintenance, washing the car, insurance for your car payment. What of these things should I or should I not deduct?
If you're listening on YouTube, I would put a big asterisk next to that close one.
Yeah.
That is a common misconception.
I think the biggest risk in all of this is the asterisk. And I would look at this very closely.
All right, we got to roll.
Okay, let's go.
So are we
going to go in order?
Are we? Yeah.
Or,
what are we? How would you like the outline to look, Kevin?
Just follow my lead, Mike. I'll get you there.
Let's clean up the first and second tip, and then move into the third.
Summarize the summary.
Start with a summary that kind of connects the two. You want to make sure that your income and expenses are clear, because on the other side of that is how much you have to pay tax on.
Mm-hmm.
Okay. So Josh, can you sort of champion that, and
Sure.
Kevin and I will add in, and then we'll switch to the third. All right. Do you have any side income, rental income, Etsy, Airbnb, Uber, that sort of thing. Do you know how that's going to impact your tax return? Do you know that how that's going to impact your tax planning? Ooh, that is what we're talking about today. This is the Wise Money Show with Korhorn Financial Group. Thanks for being with us. My name is Mike. Here with me in the KFG studios, Kevin Korhorn and Josh Gregory. Want to say thank you to the attorneys at South Bank Legal as well as First State Bank for sponsoring the content of today's program. We have a special sponsor as well in the fourth segment, Auto Owners, so we appreciate all of that. Listen, to stay up to date on all Wise Money content, you can find us online, wisemoneyshow.com. And then wherever you're at on social media, we are there too. Just search the Wise Money Show and follow us there. All right, so we're talking about the top 5 tax tips that relate to having any side income, freelance or any side hustle, the kids call it these days. So we've hit the first 2. Josh, why don't you just recap those before we move on to the third?
Yeah, we said the first tip, if you do have a side business of some kind, is to make sure that you're tracking all of the income or the revenue into that business, and equally important, the expenses out of it. And part of the reason is staying current and staying ready to prepare your taxes at the end of the year, because you may have to file some special forms like a Schedule C on your tax return, which is basically just compiling all the revenue that you have, subtracting out the expenses that were generated or were caused because of chasing down that revenue. And what's left over for many people gets taxed as self-employment tax. And this is the second tip, is just being aware of how self-employment tax may apply to the profits on this side business. That side business could be some pretty expensive income for you on the tax return.
I mean, the total taxes could add up to 40 to 50% almost.
Right, and it could be expensive, especially if you're not being careful and making sure that you're deducting all that you can deduct. Because if you have a side business, if you look at the deductions, think about your cell phone, a computer, your internet access, a home office deduction, mileage. There are all of these things, if I have a side hustle, that I can deduct, that if I don't, if I'm just an employee, I can't deduct. So I want to make sure that I start with that top line number, whatever my income was, but I apply all the appropriate deductions. So that's the smallest number it can possibly be for me to pay tax, federal, state, and self-employment tax on. And then what I encourage people to do as a life hack, we said set up a separate bank account. I would set up 2 separate bank accounts. One is for the self-employment tax portion, and the other is for the income.
I would say one's for the tax portion, and self-employment's part of that.
Right.
Because this
That's
income, you're not having federal taxes withheld or state tax withheld. So one to set aside the money for taxes, and the other that kind of is the repository for all of the income where you pay your expenses out of.
You may also just pay attention to the fact that sometimes a lot of these side businesses are operated out of the home. Mm-hmm. And if you have a devoted space within your home that is exclusively used for just this business, it's an office for the business, or maybe it's where you do some sort of production or packaging or something, keep track of all of your expenses for the house, because it's possible that you get to write off a small portion of all of expenses like utilities and real estate taxes and mortgage interest on this Schedule C. Mm-hmm. And so, again, you can't pull that off at tax time, just scrambling around in a few minutes on your way just before you're out the door to go talk to your CPA or your tax preparer. That's something that you have to have organized well before you get to the face-to-face conversation with your CPA.
And more than you want to know about that, it used to be people were afraid of claiming the home office deduction, but there is such thing as a simplified option where you claim a standard deduction of $5 per square foot of home used for business up to a maximum of 300 square feet.
Primary, it's your primary business location and exclusive use. So there are limitations to this, but absolutely, if it qualifies, you've got to capture it. Let's keep moving here. The third tip for those of you with side income is you have to be aware of what eligible retirement contributions, what those are that are now available to you.
Yeah, I'm assuming that Kevin's going to get especially excited about sharing part of this one just because, retirement plan contributions is such a huge part of the planning that you're doing for your own future. And you may have more options available to you if you have a side hustle going on. If it is earned income, if it's self-employment income, you could possibly contribute to things like a SEP IRA. You could set up your own individual 401k potentially. You could get, even maybe a little bit more complicated with a simple IRA if it made sense and there were employees involved and things like that. But this goes beyond just a traditional IRA and a Roth IRA that you hear us talking about all the time on the radio. And the reason it's important to know what your options are, you may have significant profits or significant income from a side hustle. Maybe it started out small, but it's really starting to accumulate, and you find yourself creeping higher and higher in the tax tables, paying higher and higher rates. And so you have a bigger incentive than ever before to try to set aside some of that money for your future on a pre-tax basis potentially.
Yeah, if you were overwhelmed by those taxes, I tried not to share but did, that this income is going to be taxed federally for federal income tax, state and local, and then self-employment tax, and really that can add up. So you say, well, where's my relief? Well, expenses are your relief from the self-employment from all of those, right? But you're doing this to make profit, to make some extra money. And so the way to help shelter some of that money from federal and state, not from self-employment, is using a SEP IRA or some other type of retirement plan. And here's another idea. If this is a side hustle, meaning you've got a main hustle, and maybe you've got a 401k or retirement plan through the main hustle, and you're contributing to it enough to get the match, or you're doing as much as you can, but hey, things are tight, so there's still more that you could do to maximize it. Well, with this side income, you could actually defer more of your main income into your retirement plan at work and offset it basically with the income that you're getting from your side hustle. Therefore, in a way, for your household, for your tax return, ultimately avoid some tax that this side hustle could create.
Yeah, there are all kinds of, and I'm thinking of about 17 stories right now of creativity that we've applied to client situations. So if you if you have a side hustle and you're not getting great advice and creativity, I would encourage you to keep looking until you find it.
Yeah.
I would be working with a financial planner, and I would make sure that financial planner is certified, and I would make sure that that financial planner has an expertise in tax planning.
Absolutely. And, if I can make a prideful comment here about our team, one of the things I'm most excited about, the enhancements that have come recently within Korhorn Financial Group, has been building up the expertise in this area of retirement plans. And, we have always said that we want to be supportive to small business owners out there because the more successful that they can become in their own financial life, that has a multiplication effect, a ripple effect throughout our entire community. As they do better, they create more jobs and so on. And retirement plans are one of those places where your own personal financial planning intersects with the business in a way, right? We often draw a distinction between your personal life and your small business. But when you have a side hustle like this, it's easy for them to just kind of get melded together, and you might even lose sight of why you're doing the side hustle or what it could do for your future. And when you start thinking about the side hustle driving long-term future results for you, this is incredibly exciting and motivating to us as advisors. It's fun to watch those success stories.
So certified financial planner, doing comprehensive financial planning, we call that one plan, connected with your tax preparer, because if you've got a side hustle and you're trying to capture all the deductions and be aware of these things, you're not doing those taxes on your own. And then connected to your retirement plan advisor. All of those people need to be connected so that you're getting cohesive advice. And that's what we offer. So two more tips here for side income, side hustle. So a lot coming up here on the Wise Money Show with Korhorn Financial Group. All right. So the side hustle I mentioned earlier is a little bonus content. A friend of mine from actually going way, way, way back, elementary school and high school and so on, played hockey with, came to me with an idea 3 years ago of a tech type startup. And I was like, okay, well, that's a good idea. I don't know anything about tech, but okay, I'll help. And I was like, yeah, just, run the finances. And I did think it was a worthwhile idea, but it takes a lot for a small business, for an idea to succeed. Korhorn Financial Group celebrated its 25th anniversary last year, and that is defying the odds. And so despite a great idea, but the tech folks doing it on the side, we shut her down. And so it just, takes a lot to make a side hustle work. And there's a distinction, we're not going to talk about it in here, between a business that you're running versus a hobby. Now, this was a business. We were trying to have it make money, but
the problem is when you're competing against people who are doing the same thing and it is not their side hustle.
Right.
They're working at it every single day, all day. Just the extra reps, the extra attention, the extra investment that they can make makes it hard sometimes for that side hustle to keep up. And it's one of the reasons why a lot of people do start a business in their garage or in their basement or something. And when it gets enough momentum, you get to a fork in the road where you either have to take the leap and start pouring all your attention into it and getting up to a critical mass, or the risk is that it's just going to kind of continue to limp along and someone else is going to blow by you. Yep,
which is what happened. I think we were the second folks with that idea. There was one other person on the market, and now there's 4. And so anyway, all right, let's get back into it. So we got to hit 4 and 5, those 2 tips, and then kind of recap. And I bet that takes the whole segment, and then we're ready for the 4th with questions. Sound good?
Yeah. Thanks for that roundup, Mike.
Funny. The business was called Even Up.
So, nice try.
Nice try. All right.
Oh, Roundup is the one that there's a class action lawsuit on.
Yeah, that's not do not associate. Yeah. All right.
7-Up. Okay.
If you have side income, do the letters QBID mean anything to you? They should. And we're going to explain what that means in just a second. This is the Wise Money Show with Korhorn Financial Group. Thanks for being with us. My name is Mike. Here with me in the KFG studios, as always, Kevin Korhorn and Josh Gregory. Thank you to Bethel University Adult and Graduate Studies, as well as Diane Bennett and her Inspired Homes team for making the Wise Money Show possible. Thank you very much. If you're not watching on the YouTube channel, I'd encourage you to find us there. Just search the Wise Money Show on YouTube. Every episode's posted there, as well as different vlogs and other videos throughout the week. So head there, YouTube, just search the Wise Money Show, subscribe to it, turn on that bell so that you're notified of every episode we drop there. All right, so we've got our 5 tips for folks that have side income, and that is a growing and growing segment of the population. Research currently says 30%. Some segments of the population, it's closer to 50%, have side income. So how do you make sure that you're incorporating that into your entire financial life? We mentioned the first 3 tips. Let's get to the 4th tip, and that is, you needed to be aware in tip number 2 about the impact of self-employment tax and how this income's actually taxed. The 4th tip is you need to be aware of how you're going to pay that tax and consider tax estimates.
Yeah. This is actually a tip that applies to more than just folks who have a side business. It's really anyone out there who has income streams in a given year that are not having taxes withheld on them automatically. So, when you earn your paycheck at work, your employer is pulling taxes off the top, sending it to the government for you. But what if you sell a property at a profit? Or what if you have some rental income? What if you're drawing Social Security and not having them withhold money on it or pension? A lot of retirees.
What if you've built up a lot of assets outside of tax-sheltered accounts? So you've got a lot of interest and dividends and any capital gains that push through. I mean, most people, because it's investment and, gosh, a lot of that is in tax sheltered, it really doesn't impact tax return. A lot of people miss planning for that one, that if it's not inside of a tax shelter, it's going to impact your tax return.
Well, so those who do have a side business, and by its definition, it's income that you're receiving and you're not withholding taxes on it, this one becomes especially important to be prepared to pay in quarterly estimates potentially. Unless you do some creative planning and you really ramp up your tax withholdings on maybe that paycheck income that you have elsewhere. But either way, it takes some careful planning and projecting. You don't want to get behind on those taxes because that side hustle potentially has self-employment tax on top of all your normal taxes that you're used to.
If you get into the cycle, and Josh already mentioned this early in the show, if you get into the cycle of using your income from the first quarter of next year to pay the taxes from last year, then you're going to be in this chasing your tail. If you've ever seen a dog do that, that is what it feels like. And that side hustle is a huge pain in the neck. And you actually feel like, why am I doing this? This is not helping at all when you get in that cycle. So increasing your withholdings, absolutely, if you have very predictable, consistent, manageable side income. But if it's volatile, meaning one quarter you're going to knock it out of the park, the next quarter you're not driving for Uber at all because your life's really busy. If it's inconsistent, quarterly tax estimates is probably the way to go, and you just need to be informed as to how much to pay in. And when I say quarterly, they couldn't have really made this more confusing.
Oh my goodness!
Because
big complaint, isn't it?
I think we all know universally what each quarter means in the calendar year. Not with the IRS. Quarter is April 15, June 15.
Just 2 months later.
And then September 15, and then January 15. Doesn't make any sense.
It doesn't. And a lot of people miss a quarterly estimate here and there just simply because, well, they are spread out and they're not evenly spread out. So this is something that it's important to have alerts set up in your system to constantly have this on your radar screen so you don't get behind.
And if you miss one, and you know what it's supposed to be, just pay it.
Yeah.
Just pay it, because the sooner you get that money in, there's a pretty complicated calculation you can do, but I would just get it paid.
So, and then how much to pay? That's where, again, you need to be doing comprehensive financial planning. And I go back to the first tip, which is you need to have a view of what your income is and what your expenses are. Because we see a lot of people, just like we talk about where people haven't paid in the right amount, we get a lot of people who pay too much. Oh, I guess I'm supposed to be paying this. And then you wind up getting a big refund, and you might say, oh, that feels great. Yeah, except that money could have been put to different use instead of being paid to the government. And so you want to make sure that you're being mindful of how much your estimates should be.
You know, in a perfect world, you would even be able to kind of break it down to, on a monthly basis, if you're tracking the business results of this side business that you have going, you should know each month what kind of profit did it generate. And I encourage all of our clients who have a side business, or maybe they're just small business owners and that's their full-time gig, to know how much of each month's profit should be set aside in a do not touch account that you label taxes, so that the money has been building up throughout these quarters. And when it is time to make the check out to the government, get it sent in, the cash is there and it's not creating a crisis for the business.
All right, so let's get to the fifth tip, and that is something new. And in the financial world, everything turns into an acronym. And so a new deduction was created with the tax law changes a couple years ago, and it affects a lot of people with side income. It's called the Qualified Business Income Deduction, QBID. And so it's important that you figure out if your side hustle, if this applies, and really how to qualify for it, and then make sure that you've captured this deduction on your taxes. So what is it, I guess, first, and how does it work?
Well, to oversimplify, it's a 20% deduction of the whatever would hit your tax return from what you've made. So if your top line minus your expenses equals your bottom line goes to your tax return. That number gets 20% taken off of it, and you pay taxes on 80% of your bottom line.
Yeah, this really is a nice deduction. Last year was the first year that we saw it starting to land on tax returns because this was part of the recent tax reform. This was the government's way of really supporting small business owners. And if you have a side hustle, you're considered a small business owner in most industries and everything. And so this is a way for you to really significantly cut the overall tax bill that you have to pay on the profits of this business.
We talked about the different sources of income, the different types of tax you'll have to pay: federal income, state and local tax, and self-employment. The QBID is a deduction from federal income. So it shows up on the second page of your tax return, meaning it's after the money's already flowed to the state. And then it doesn't help you on your self-employment, but still a huge tax benefit. So there again, if you're not on top of the first tip, where you're supposed to be, tracking your income and your expenses, and if you're not really aware of what your tax estimates could be, this QBID could catch you by surprise, and it might mean that you're paying too much in estimates and kind of having some wasted cash flow. So be mindful of how this fits into your situation and how to maximize it. All right, let's wrap this up. I mean, we talked about these 5 tips. The folks with side income, it's a growing and growing part of the population. How would you summarize, or what would the next step be?
Well, of course, this is a show about financial planning. And so my hope would be that for whatever reason you started this side hustle, maybe it was just a hobby that you love and you thought, hey, I could actually make a little bit of money at this. And it's really grown and taken off over time. Whatever you're doing and whatever the original reason why, I want to encourage you to begin letting it take a prominent role in your own financial planning. Make sure that you know and understand what that side business and the income it's producing for you and your family, what can it do for your financial future? But then also, what are the dangers that it brings with it as well? Sometimes those side businesses require that you have some protection in place, extra or important types of insurance, or maybe a legal structure that would help limit the risk to your overall financial life. We've been talking a lot about the tax ramifications of these side businesses. I think it warrants having this be an important part of the conversation you're having with your certified financial planner.
And right now it's tax time, so making sure that you're capturing all deductions and that you're reporting things the right way. So, all right, we've got great questions coming up here. We've got that and more to come here on the Wise Money Show with Korhorn Financial Group. All right, good stuff. All right, so this is Auto Owners sponsored segment. And I've got in the question bank, I've got one insurance-related question there. We'll probably not spend the entire time on it.
I do think that the side hustle is going to become more and more and more a component of what people do, because they're not going to be able to get it done with what they're currently doing. What they're currently doing is being phased out or changed. If you look at the rate of growth and change with technology, it's going to take things that people used to get paid to do, and they're not going to be able to get paid to do it anymore.
Yeah.
So people will continue to evolve and do different things to get paid. What?
All that work you have on the very first item on your favorites is show outlines and question bank.
Right.
So now you have 2 ways to get there.
Well, how was the other way?
Wise Money. I just added that one. You already had one up here.
Yeah.
So you're good.
Thanks, Josh.
You're welcome.
All right.
The bank is open.
Okay, so the question, is it cheaper to buy your insurance online?
All right, ready? Thanks so much for being with us. This is the Wise Money Show with Korhorn Financial Group. My name's Mike Bernard. Here with me in the KFC studios, Kevin Korhorn and Josh Gregory. Listen, if you've missed anything and you love listening to podcasts, you'll find the Wise Money Show there as well. Wherever you listen to podcasts, just search the Wise Money Show, subscribe to it, and rate the show. That's appreciated. Thank you very much. We are into questions from fans of the show. This is a special segment sponsored by Auto Owners Insurance. We appreciate their support. Thank you very much, Auto Owners Insurance, out of Lansing, Michigan, where I spent 4 years of my life when I was trying to grow up. Didn't quite work out. All right. First question is a great question from fan of the show, Jamie. She's 42 from Elkhart. Simple question, but I'm sure it's been on your mind as well. Is it cheaper to buy insurance online?
Yeah, and she doesn't specify which type of insurance either, right?
That's true, yeah.
So, I mean, we could be talking about a bunch of different things. It could be life insurance. It could be health insurance through the marketplace. But if we look at this angle from the home and auto insurance world, because that's what all the commercials on TV are about, right? Mm-hmm. Just in, about 15 minutes you can save 15%, or what's the promise? I don't know. It's quick, right? Just go online and we'll get you taken care of. The problem, in my opinion, is
Mike.
the problem is, do you know that you're getting the right coverage in place for you? And a quick online, hoping to save some money. Maybe you save some money because you're buying all the wrong insurance potentially.
See, I would have gone there second. The first comment that I would make is no. In almost anything else, buying online may be cheaper. But with insurance, there's not. I haven't seen it through customers and the folks that we serve. And even some of the insurance companies that we serve have basically a direct portal. You can go online and you can get it. Or you can talk to one of our team members or an insurance agent and get it as well. And it's not cheaper. So the cost of having an insurance expert in your life, and the work that they're doing, it's not going to cost you more in premium. I mean, to me, that sort of defies economics. However, currently that's not the case. It's not cheaper to buy it online.
So in other words, you're saying if you got the same thing online versus went through a professional agent of some sort, buying the exact same thing, same company, price tag should be the same.
Price tag should be the same. Yeah.
And I guess the point I was making was you might not even be buying the same stuff. You know, the professional agent who's guiding you in understanding your risks and what type of situation you're facing, they may guide you to buy the right package of insurance. They have the right protection in place. And you may be shortchanging yourself or cutting some corners and not even know it online.
Mm-hmm. Well, and you say, well, how could that be? Because if you go to a certain insurance company online, you're going to get their product. And if their product isn't the best in that particular area, so they, for instance, they don't really value a household with youthful drivers. They actually don't want to insure it. Well, you could be paying more. The tricky thing so to me, the easiest thing to compare is life insurance. That one is the easiest one to say, all right, if I go online and I look at what does it cost for a Banner Life or West Coast Life or Lincoln National, whatever these term insurance companies are online from one of these quoting companies, whatever I pay there, if I go to an insurance agent, a local agent, where I can drive into their store, I can sit down with them, I can figure out what amount of insurance I need, confirm the length of the insurance that I need, and all of these different things. The cost to me as the consumer is the exact same.
That's right.
Mm-hmm. The difference is the experience. And a lot of times, the experience can be the thing that prevents me from finishing the deal. Because if there's any complication, I have a heightened bilirubin number, well, look, that's okay because the doctors did some extensive tests and there's not an issue with that. And so you may not be able to get that done online because part of the thing is you might not ever talk to the same person twice online.
You know what? So similar situation, had a client call up just this past week and was complaining because they have a transition happening in their work situation, and they need to get health insurance in place. So they were going through the marketplace online, doing it themselves, and they were freaking out because the price tag that the system was kicking out was $2,000 a month for health insurance for this family of 4. And she's like, we cannot afford that. And I said, okay, we need to have you sit down with Ted Foster in our office, who's one of our health insurance experts. And I actually joined them in that meeting and was with Ted as he walked them through the process and arrived at a price tag of less than $500 per month. And it was because he was guiding them towards what they actually needed, not what this wizard online they had kind of stumbled into. And you're exactly right, Kevin. They had just stopped in their tracks because it's like, I can't answer some of these questions. I don't like the outcome. I don't have confidence in this. And that is the whole point of working with a professional insurance advisor, someone who knows the various companies. We really preach wholeheartedly that you need to work with someone who is independent and not just pushing one company's product, because what if you are not the target market for that company? Every company has certain niche groups of people that they have priced their products for. They have built what they believe is the best solution for that segment of the population. And if you're in that segment, great. But if you're not, you may be paying too much.
And they'll sell it to you. They will sell it to you and let you pay too much if they really don't like you as a type of insured.
Yeah.
So, but I look at that and I say, okay, so I don't have independence, because when I go to their website, I'm going to get their product. They're not going to say, hey, consider our product, but consider these other products. They're just going to say, consider our product. I think that's probably the worst way to buy insurance, is to go to someone who only has one choice to sell you. Because I don't think they're going to be doing it like Miracle on 34th Street, where they say, well, we don't have the best product, so you need to go down the street and get it from the other store down the street.
Did that happen? In Miracle, I've never even seen that.
Yeah, they came into the store.
Am I the only one lost with that analogy?
No, so they came into the store, and the old man who was working in the store said, well, we don't have it, but the store down the street, who is their extreme competitor, he sent them down there. And then everything happened. It was like, just think of the Hallmark movie, how it ends.
Yeah. So I'm glad you brought up life insurance, though, because oftentimes, I presume, Jamie, you were asking about, Geico and Flo compared to, going and seeing an actual local agent. But life insurance is also getting a lot of airtime in commercials about, or even on Facebook. If you're there, you're scrolling, you might see some ads for that. And yeah, Kevin, you hit it right on the head. I mean, when you're independent as an insurance agent, and you're shopping and looking at all the various insurance costs for what someone needs, and you compare that to what someone can pull up online, there's no price difference. It's the same thing. But the experience is completely different because you know what you need and you know you've arrived at the right solution.
Right.
So, I mean, ultimately, and this kind of ties back to the headliner topic for the show, ultimately, it makes sense to have a guide. It makes sense to have a financial planner connecting all areas of your financial life so that you know what to get and why, and make sure that it all fits together.
And with the big movement of shopping locally, you have to decide, where is the value going to go? Is it going to stay in your community, or is it going to go off to a big city somewhere else?
And also, who are you going to trust, ultimately?
Right. All right. Thank you, auto owners, for sponsoring this segment. That is all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, myself, and all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for Wise Money with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.